with you General Dynamics Corporation. I've just typed it in Google and this thing appeared. I'll just explain you briefly. The full name is General Dynamics Corporation. The Nasdaq symbol is GT, and if I want to buy the stock right now, I have to pay 181.97 US dollars, and the market cap is in billions, so it's a big size firm. Dividend yield is 2.24%. Now, you might be wondering the dividend yield is very less compared to other companies, maybe. But I just want to point out that even if the dividend yield is less, dividend yield, any company that is paying dividend, that means they're financially very strong. It's a positive sign. The reason for that is after paying their costs, liabilities, loans, and everything, creditors, they still have extra money left. That extra money they pay to shareholders as dividends. So any firm that is paying dividend, that's a positive sign. So that's brilliant. Now let's have a look. When was this founded? I can see from Wikipedia. I can search this box. I can see founded 1899, 120 years ago. And now I want to see about the employees. And I can see in Indeed, I will see the reviews, and I can see about the employees. There are 6,800 reviews and 3.8 star, and you can read through the pros and cons yourself, the salaries they're paying, the photos of the firm, the jobs they have listed, the questions, and everything. And please look in Glassdoor as well, because that's important website as well. And you can see we have 533 reviews and it's 3.1 star. Read through the pros and cons yourself, the jobs they've listed, the salaries they're paying, the interview questions, the benefits they're giving, and the photos of the firm. Now I want to see in just their patents if they have any patents. So let's have a look. I'll just paste it exactly from Google, and I can see that I'm not interested in inventors because these are people who invented but they don't have full rights. Look for assignee or applicant because they have full rights of the patents. I can see in 2002 they have patent, to 1979 they have patent, 1977, 1983, 1989, 1981. So they have a lot of patents, and the more patents a firm has, the more stronger it is in the market, the more difficult it is to beat that firm, which is a positive news. And secondly, please look for recent patents. Do they have any patents in 2015, 16, 17, 18, 19? Because that means they're still innovating. So that's very important to look for it. So just go to the list yourself. They have quite a lot of patents. Now I want to go to Yahoo Finance and I want to see the key executives and the salaries they're getting. So let's just paste the thing here, and don't be confused by which one to click because there are so many symbols. What I normally do is I just Google the firm and I just look for the Nasdaq symbol GT here, and so I'll just be focusing on GT, and I'll go to profile, and what I'll do is I can see the industry, the sector, industry, the employees, and I can see there are 5 key executives and 3 of their salaries have been shown. So I need to know why it's not applicable for 2 executives, why 2 salaries have not been shown. It says not applicable, why it's not applicable. So that's something to search about, because we need to know the salaries of all the executives for it to be transparent and build trust. So please find out why it's not applicable. That's something to think about. Now let's go to macro trend and see the ratios. Click price ratio, price book ratio, and paste in the symbol. And I want to point out that if the price book ratio is less than 1, that means stock is very cheap, it's undervalued, it's a discount, you must buy it. If it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it gets. So once it loads, I'll tell you. Right now it's 4.08. This means that if somebody buys the stock right now, they'll be paying 4 times more money. It's 4 times more expensive. But in 2018 March, it's 5.47. So if somebody bought that time, they paid 5.47 times more money. So somebody who bought in 2018 March, they paid $216 to buy something that was $39 worth. They bought it 5.47 times more expensive. In 2009 March, it's 1.23, which means somebody who bought that time, they paid $32 to buy something that was $26 worth. Right now it's four times more expensive. So it's up to you to decide if you want to wait for a while or you want to buy right now. Let's go to other ratios. I'm looking at current ratio. In current ratio, I want to see if the stock is risky or not. If it's less than 1, that means stock is risky because liabilities are more than assets. If it's 1.5 or more than that, that means stock is, very, very safe. Right now it's less than 1.5, so it means stock is risky. Let's look at the previous trends. Has it ever been 1.5 or more than that? No. Since we have data since 2005 up to now, since recent 14 years, it has always been below 1.5. It's not a safe stock in terms of current ratio. Let's look at debt equity ratio. This will tell me if the stock is mainly operating on debt or equity. I'm looking for zero point 0.5 or less than that. Right now it's more than zero point 0.5. It's a risky stock. Let's look at the previous trends. It's more than 0.5. Okay, so I can see that since 2005 up till 2018 March, it's a safe stock in terms of debt. It's always been below zero point 0.5, but I can see in 2018 June, it's a risky stock because it's a more than 0.5 ratio. So since 2018 June up till now, it's a risky stock in terms of debt. Let's look at return on equity. I'm looking for 8% or more than that for it to be brilliant. Right now, it's more than 8%. It's brilliant. Let's look at the previous as well. So I can see that for like since 2005 up till now, it's always been above 8%, which is brilliant. But just in 2013 and 12, it's a minus equity, so that's just once off, so that's fine. I can ignore that. That's not that bad, even though it's a minus equity, but it's for a small period. But before that, it has always been more than 8%, and after that, it has always been more than 8%, so that's brilliant.